Beginning from August 1, deposit money banks will now debit bank accounts of chronic loan defaulters. What means is that if you owe in bank, a year debt can be set off against your account balance in Bank B. Now, the Central Bank of Nigeria issued the Global Standing Instruction GSI guidelines, and this is aimed at reducing non-performing loans in the banking sector and to monitor chronic loan defaulters. To help us bring this to perspective is the President, Institute for Governance, Risk Management and Compliance Professionals, Dr. Emmanuel Abolo. Dr. Abolo is also the Director General, the Economic Think Tank Center. Thank you very much, Dr. Abolo, for joining us on the show. All right, Dr. Abolo, what do you make of the CBN's GSI guidelines for banks, and how apt is it at a time like this?
Thank you very much. I would say that this is a policy in the right direction. I wholly support it, and some of us have been advocating for this for many years back. Let me say this, that the Bankers Committee have done a very good job in saying that the Global Standing Instruction should be effective from August 1, 2020. What that simply means is that if you are a debtor in one bank, the bank, that is a creditor bank, has a right of set off from any of your account balances, investments, whether savings account or domiciliary accounts or investments in other banks. So they have a right of set off. So it is not a case of the old set off whereby the bank only has recourse to the balances which you have with that particular creditor bank. So what has happened, it is now a global. That means the entire banking system, wherever you have balances, if you are owing a bank, Bank A, for instance, that Bank A has a right to offset off from any account balances or investments in other banks. This is very laudable, and I commend the Bankers Committee and the Central Bank for this noble initiative.
Now, how do you see this impacting the banking industry's non-performing loans ratio?
Well, first of all, what are the key objectives of this global standing instruction? There are three key objectives, and the last one has to say, it says that it is aimed at reducing incidence of non-performing loans in the Nigerian banking system. Well, I'm not quite sure that this single policy alone will be able to achieve that, because the policy applies only to individual accounts. It does not apply to corporate accounts. And corporate accounts, they make up the most significant, even not more than, it should be up to 80% of total banking loans. So the policy only applies to individual banks, and I think that is just a tokenism as far as I'm concerned. And of course, we are going to talk about the unintended consequences of this action. So I'm not quite sure, but the first two objectives of engendering an improved credit payment culture, yes, it will help to do that. Watch list of consistent loan defaulters, it will also help. But my fear is that it may not be able to reduce the incidence of non-performing loans in the Nigerian banking system, because it does not apply to corporate lenders. Of course, if the Bankers Committee or the Central Bank decides to unveil the corporate entity, that is, you open up the corporate entity and see who the real owners of the companies are, and then also target those individuals. Otherwise, this is just a tokenism. It will not be able to reduce the issue of non-performing loans in the banking industry to a significant extent.
All right, Doctor, let's talk about these unintended consequences. You did mention that. Yes, we have looked at what the central bank is trying to achieve here. So, but what are some of these unintended consequences that probably would arise from this policy?
Thank you very much. There is what we call announcement effect in economics, announcement effect. Now, this policy has been on the drawing board since maybe May 2019, May. So those who are chronic defaulters in the banking system are already aware that this policy is on its way. So if you are a chronic defaulter, what are you going to do? They would have started closing their accounts. That's almost 1 year. They would have started closing their personal accounts. They would have started shutting down their investments. And then what is going to happen is that they may decide to open accounts in the names of their wives, in the names of their children, in the names of cronies. So you are not likely to get balances of any of these chronic defaulters for you to have a setup. So that is one unintended consequences. Many of these individuals would have been closing their accounts. So what I expected was that as soon as they decided to be crafting this policy, they ought to have given instruction that none of these defaulters, balances should be tampered with. They ought to have been, what you call, you would have put a stop on that. So that is one unintended consequence. The other one is the issue of dispute resolution. Of course, these customers have contract with their respective banks. And for instance, also, if the creditor, if the lending bank decides to trigger the global standing instruction, and it was triggered wrongly, and because the implementation may be very rough at the beginning, there will be a lot of disputes, and that will take many banks to courts. And that is going to that is one unintended consequence. So how is that going to be addressed? The other point is it that we're going to be establishing, credit courts or dispute tribunals, because a lot of disputes are going to arise between banks and these very customers. So those are the unintended consequences. Then the final point is that these individuals may no longer be, they may decide to move their funds around. They may decide to move their funds around, and that is going to have some implications on the banking system.
All right, Doctor. Now, recently, the central bank, was talking about allowing banks restructure loans because of this COVID-19 pandemic effect. So why is this policy important now? What happens to loan restructuring and amortization for the borrowers? And of course, given that the minimal rate of non-performing loan ratio at this time?
Thank you. That's a very good question. Let me say this, that restructuring of loans has always been a resolution mechanism, for bad loans. What does it mean to restructure? It means you change the structure of the loan. And what are the key elements of this structure? The original structure could be that they are lending to you at a particular interest rate. That is part of the structure. Then, of course, the tenure or the maturity of the loan, the tenure of the loan, and then, of course, other elements of the loan agreement. So when you request for restructuring, you are simply saying you want to provide a leeway to enable the customer to be able to pay up. So for the past 5 months, many companies have not been in business, and I happen to fall into that particular category. They have not been in business, so they have not earned any money. So how are they going to pay this money? So one key aspect is to extend the moratorium and also extend the tenure. So if it was 8 years loan, you could just shift it to, like, let's say, 10 years loan instead of 8 years, and then the interest rate as well can also be looked at, and other elements of the total loan activity. So restructuring is very good, and I urge the Central Bank of Nigeria to fully support it, because otherwise you are going to have a lot of non-performing loans, and that is going to have serious effect on liquidity position of banks. So it's a very good policy, and it's one that should be embraced by the Central Bank of Nigeria.
Now, if I may ask, Doctor, where is the Credit Bureau in all of these policy? I mean, the GSI policy, their role seems to have been neglected in this.
Well, it is not a question of being neglected. It is a question of why were credit bureaus set up. They were set up to provide information to lending banks, commercial banks. So before you lend money to a bank, the law requires that every commercial bank must sign on to at least 2 credit bureaus. What is the purpose of that? You need to assess the two credit bureaus and get information on the customer who has approached you for a loan to see whether the customer is owing other banks. Not just that, what is the status of the loan that they are owing? Now, if the information provided shows that the customer is owing a bank and that the loan is not performing, what that means is that under the prudential guidelines, the bank cannot and must not give a loan to that particular customer. So they were set up for that purpose. For this GSI, it is NIBS, Nigeria Interbank Settlement System, that has the custody of all BN of all customers in bank customers in Nigeria. They also hold records of all bank accounts in Nigeria. So the GSI is maintained by NIBS. So credit bureau, they have nothing to do here. They don't really have anything to do here. The ask is to provide information to banks when they want to lend to a customer. These two are different.
All right, Dr. Abolo, in all of these, what is the outlook now for the banking industry in terms of non-performing loans?
I will say very, very emphatically that the outlook is a bit grim. I'm not just sounding alarmist, and it is not their fault. It has to do with exogenous factors beyond the control of everybody. It's not only Nigeria, but also America, every part of the world. You have stopped all the supply chain. So every that banks just opened quite recently, so no one has capacity to pay back any loan. The only saving grace is for the central bank and the government to inject liquidity into the banking system so that we do not witness, massive bank failures. But I am not saying there will be bank failures, because I had already made a YouTube video showing that no banks will fail in Nigeria. But of course, it is dependent on what the Central Bank of Nigeria does and what the federal government does. They need to, inject funds into bank liquidity. It is not the fault of these banks. It is not the fault of anyone. So if banks are not to fail, Central Bank must wake up to save this bank from the imminent, problems.
All right, thank you very much, Dr. Emmanuel Abolo. Thank you for your time. Dr. Abolo is the President of the Institute for Governance, Risk Management and Compliance Professional, and of course the Director General, the Economic Think Tank Center. We'll take a quick break, and when we come back, we'll look at some developments in the world of commodities.